We are keeping a close eye on the markets this morning following yesterday's turmoil on the street. Let's take a look at how the big board is doing.
What's better?
Pretty flat. Well, I mean, yes, technically it is doing.
Listen, I was missing you yesterday because this board just kept on dropping, and I was like, I don't know, it looks really not good.
It really
but I
kind of
need
wasn't
some expertise there. I feel,
It was not good. Of course, this was based on those inflation numbers that came out yesterday, of course, and that had a really tumultuous effect on the stock market. It is sort of flat right now, but we're going to get into it.
Yep, Dion Rabouin is joining us now. He's a reporter for the Wall Street Journal. So we watched things just tumble yesterday, and then before the opening bell, there seemed to be like it was inching up, and I thought, I know I don't know anything about this, but I thought they always say buy, you know, on the downturn. Maybe this is the time to buy.
I mean,
what's behind the sort of increase that we've seen so far?
Yeah, so what we're seeing today is, and I was going to let you have this one, Anne-Marie, but I guess I'll take it for myself, is what folks on the street like to call a dead cat bounce. Essentially, when stocks sell off and you have this huge down movement the day before, usually the next day you get something of a bounce back up. Folks, you know, doing like you said, buy the dip. There's a big mantra out there on the street, BTFD, buy the forgetful dip, if you want to say. But, you know, folks say, hey, get out there, buy when prices have fallen. So it looks like we're probably seeing that today. Really, the fundamentals haven't changed. There's not anything that's really, you know, been a big shakeup in terms of what we saw yesterday for today. Even the inflation data we got today was a little better than expected, but not anything to be excited about. So that's probably why you're seeing some green on your screen today compared to the just massive bloodbath we saw yesterday.
And we've talked about this before, which is that oftentimes when there's negative news that impacts the market in a day, that actually has a tendency to frighten small investors. And when I say small investors, that includes people that have hundreds of thousands of dollars in the market, but that are still considered retail investors because they're putting that money in the market for the future, maybe to buy a home or to fund their kids' education. Whereas the institutional investors, as you know, Dion, will say to themselves, this represents an opportunity to reposition portfolios, to reposition 401k accounts that they're managing for large institutional clients. And so maybe we're seeing a little bit of that, whereas the big guys are already taking advantage of these moves in the market to reposition their portfolios in a better way.
You could be seeing a little bit, but after just the carnage we saw, I mean, the NASDAQ was down 5% yesterday. The NASDAQ 100 down close to 6% yesterday. So just the absolute carnage you saw, if there was a repositioning today, if traders had changed their mind about the market, you'd be seeing numbers compared to yesterday in the green. So up 2 or 3%. We're not seeing that. You're seeing up about half a percentage point or less for some of these indexes. I think this really is just that a lot of the sellers have kind of washed out of the market and there's not a lot of buying appetite, but there's not much more appetite for selling. People seem to have gotten it out of their system yesterday.
That makes me a microscopic investor, like I can barely see you. Nothing I do counts. But let me ask you this. So, you know, when I saw the inflation numbers yesterday, I was like, okay, so it's not a matter of if or when, it's a matter of just how much are the Feds going to raise interest rates. What do you think the Feds are going to do?
Well, you've got Fed Chair Jerome Powell, who has really just been pounding the table saying the job is not done. We have more work to do. Inflation is still not under control, and that's what we've got to do. He invoked Fed Chairman Paul Volcker, who was famous for in the 1980s, the early 80s and late 70s, whipping inflation, really causing a recession that was very painful, that caused a lot of folks to lose a lot of money. But he did get inflation back down towards those lower numbers when it was up near 15, 16, 17%. Now, Paul Volcker did that by raising rates to 20%. We aren't anywhere close to that right now. That would literally be about 10x from where we are right now. But Fed Chair Jerome Powell, who is the leader of that group, has said that the job is not done. We've got more to do. And yesterday's CPI report likely gave him more or added more fuel to his fire, not less.
So when do you think, just based on the reporting that you've done, that consumer prices will start to level out?
That's a great question, and that's a question I'm sure a lot of folks would know. The thing about yesterday's report that was so severe and why you saw such a strong reaction, especially in the stock market, but also in the bond market, was because it suggested that that time is further off now. The pricing or the expectation among economists was that we would get 8% year over year yesterday. When we got higher than that, and that increase in the core rate, which is things excluding gas, excluding food, that suggested that inflation is going to stick around longer, that it may be higher around these 8% or above levels for even longer, and that's going to take that's going to make it take longer for inflation to get back down to that 2% level, which is what the Fed wants. That means there's still some economic growth. Things are still moving along in the economy, but it's not so much that you're, gasping every time you're at the gas pump or at the grocery store.
Fascinating.
Yeah, Dion, that was really interesting. Thank you very much.
Thanks for having me.